All right, so I'm going to start from the top. I was asking what trends we had around this very particular area. And then somebody said, sorry, Benny said it was a downtrend. So I said to explain what a downtrend is, you need to be able to explain the fact that there is a formation of lower highs and then lower lows. So the consistent formation of lower highs and lower lows describes what we call a downtrend. And I said, if you are on a daily time frame and you see such a picture, the key important thing to note is that downtrend on the higher time frame, such as a daily, weekly, and monthly, will mean that we shall be taking sell trades all. I hope that makes sense.
Yeah.
So if you're on a higher time frame and then you see a clear picture of lower highs and lower low formation, that tells you that all the trades you want to be taking on your smaller time frame with details. And that is very, very important. Every single time on a higher time frame, you see a clean trend, that tells you that once you get on top of the lower time frames, you should be able to find proper and cleaner cell setups on there. So in this case, if we look up here, high, low, lower high, lower low, higher high, and then we created a lower low. There is something very significant that happened around this area, and which is this. If you look around here, when we broke below this area, price did something up here. And who can tell me what has happened?
BOS.
Yes, we broke market structure once price went above that particular area. And that tells you that this wasn't just a down move to create a lower low. Instead, it was a down move, an intentional down move that has caused a liquidity capture. Am I making myself clear, guys?
But you had the same thing at where you marked lower low. I don't know what's the difference between the previous one and.
I had the same thing where I marked a lower low here,
Yeah.
right? Let's go into detail and see what happened. So liquidity was here, right? We broke market structure up there, right?
Yeah.
Yeah.
And it came back into the institutional candle, which is there and there. So if I take 50% of this particular candle right here, that 50% is where we came back on that price went bullish.
Yeah.
Can you see that?
Yeah.
That is the reason why I'm telling you that, of course, we know exactly what is happening here. Can you hold on for me for a minute, guys? I'm gonna pause the recording.
I can't see it on my screen. I'm looking for it. I can't see it.
Oh my God.
This is so important.
Oh my God.
No, I think you're recording. I can see the record sign.
I just
It's
typed.
now. He just put it
Oh,
on now.
I just typed. Oh my God. Anyway,
It's all right.
well, the particular area that I said liquidity capture, look what we broke market structure here, went higher here, and what is here? An institutional candlestick right there. Now I can put a line right here, a line right there. Let's go on the low. Let's go on our left and see what happened. Sorry, our right and see what happened. Look at that. You might not see exactly what I'm trying to say. Let's just put a box and stretch it around there and see. Extend to the right. Look at that.
If tested that.
We came to test the institutional candle, the last move to the downside that broke market structure, right? The last move. We came here, and when we jumped into that particular area, what happened? Liquidity capture, break of market structure, back into institutional candle again. And the bullish move started. Break of market structure, institutional candlestick, up. Break of market structure, imbalance fill, up. Look at that. So price action has been distributing up, nicely. And what happened when we got here? We broke market structure, claimed liquidity, broke market structure down here, back into the institutional candlestick. What do I mean? 50% of this institutional candlestick. Just to blow your mind, look at that, 50%. I didn't create this, guys. It's not magic either. It's what the market do. Into the 50%. Look at that. Nicely distributed. And since then, price has been selling off nicely. But since we reacted from there, have we broken market structure? No. We haven't broken market structure. Instead, you can see that since price reaction from here, all our focus is to go higher than this particular area. Don't blame me. Don't blame Francis when price gets to 1.84 in the future. It is what the price is. Look at that. Liquidity capture, break of market structure, fill of imbalance, up. Break of market structure, come back into the institutional candlestick, up. Right? Liquidity capture again. We captured liquidity here. Now we have a break of market structure. Now this place should be your worry. This particular candlestick should be your worry for the future. If you really want a proper buy, that is your problem for the future. Why? Because we captured liquidity here. And we are broken market structure there. There's a picture we have on a daily time frame. Now, when we capture liquidity here, I want us to focus inside this particular wick on the smaller time frame. Let's go on 15 minutes. I don't know if we can go that low, but let's give you a shot. Yes. As price captured liquidity, look what happened. Look what happened. Right? We captured liquidity, broke market structure, and now let's pull out fib and see what happened. Just to blow your mind. Imbalance here, 50%. Optimum trade entry. And it wasn't just a 50%. It wasn't just a 50% because if you take this consolidation before the down move, that captured liquidity, if you put a line to it, exactly where price came, a line above that consolidation, exactly. Look at that. So you had confluence as to what is really happening, lining up with 50% optimum trade entry, lining up with the particular consolidation, The manipulation, they caused people into buying, selling, buying, selling, buying, selling. They came back to that very area, jumped on it, and since then, look at that. Now, break of market structure, optimum trade entry, boom. Come on. Break of market structure. Let's go on 30 minutes. Where was I? Yeah, break of market structure there. Optimum trade entry, buy. Now, where is the last break of market structure? Here. Once again, optimum trade entry, buy. It wasn't just an optimum trade entry. What is sitting here was the last sell move that caused the buy movement. So if I put a line right there, look at how precise that was.
Francis.
Yes, boss.
Can you yeah, just
all I did was the sell move. Look at the sell move. Why was that sell move important? Because it was sell move manipulation to capture liquidity.
So my question is that why me I thought that this, let me annotate it please. I would think that this area is already mitigated by this, so I won't expect the price to come back.
You wouldn't expect, but what is the point of mitigation if there is still this imbalance down here?
Yeah. So
let's just put the line for you. Let's put the line for you.
God, there's so much detail into this thing that we can't see.
Yes, it has been mitigated, but even if you fib it, you can't mitigate a candlestick less than 50%. That is not mitigation.
Yeah. Even if you don't measure it, you can see that it's less than 50%.
Yeah. And by doing it, he's making liquidity there, just here, so he can come back and take it.
Francis, there is a question from Dennis.
All right, what's the question? Let's have a look. Okay, what does mitigation mean? Mitigation just means the reaction of the institutional candlestick. It's not a big language. A reaction of an institutional candlestick, of an imbalance, everything. That particular reaction in terms of trading, we say a mitigation. I hope that makes sense. So on that note, another break of market structure. What do you expect? This big move right here, which do not make sense, this particular move that do not make sense.
Doesn't that look like what you were doing on Sunday, writing some type of sign?
Yes, so this move does not make sense because it was a high impact news that created. So the 50% of that particular area is where you should watch for your next time reaction. Simple as that. Then we can continue higher. If I pull my fib from this low to that high, let's say price is going to revert from that particular area. You see how that sits inside the optimum trade entry. 50, 62, 70.5, 79. I'm done with you guys. Any question? Any question?
My question is, what is your routine to find a pair to trade in a day, for example? I don't know, because you have
I don't just wake up and find a perfect trade. right?
Okay.
I don't just wake up and find a perfect trade. Just like I've walked you through the example of G-card, I make sure that I've done that and I have this point of interest laid out. So for me, people will be rushing, buying and selling throughout the whole day. I am just waiting for this trade. That's it.
So you wait just for one trade.
The reason why I wait is because if that trade plays out, that's it, I'm done. I don't care about how many times people are taking hundreds of trades before my trade got triggered. It's not about the numbers of trade you can take in a day. It's about the quality of trade you can take.
Even if you're a scalper, I mean, does it mean you have to? Does it mean you have to wait for forever before you place one trade? As a scalper,
you just have to. If you're a scalper and you don't want to go through this hassle, you just have to look at what I've done in a short time frame. So what is creating here? High, low, high, higher, low, higher, low. So you could be trading this trend, this small trend. You could be trading now. And you will see that inside this trend, it was the same things over and over. Liquidity capture, we broke market structure, optimum trade entry, institutional candlestick, buy. Back into that same area, buy. Right? So you could be doing the same thing, break of market structure, retracement, buy. You could be doing that on a smaller time frame. It is completely your choice. You could be doing this on a 5 minutes time frame. But then the problem is you will be stopped out a lot because you're not really paying attention to the higher time frame trend.
my question is, you want to maybe probably want to trade on a 1 hour time frame.
Yeah.
Then you have to. He said if you want to trade on the say 4 hours, then you will backtest the lower time frame.
Yes. Then your trades will be taken on a 15 minutes time frame and a 5 minutes time frame.
About what you did, the chart you showed us previously, you plotted everything on, is it on a daily time frame, and went back to 1 hour and said it will give you a 1:12
yes,
risk to reward in 1 hour, and they give you lower risk to reward in the higher time frame.
Yes, if you look at the daily time frame, the only difference was that on a daily time frame, I was taking the trade from the 50% with my stop loss below the institutional candlestick. So my stop loss is bigger. I have bigger stop loss, right?
Okay.
But then if I go on a 1 hour, the same area where I wanted to take the trade, if I take you on a 1 hour, this is my stop loss.
Oh, okay.
So that's the difference. Yeah?
Yeah, I understand.
And before the sell happened, break of market structure, liquidity capture, break of market structure, back into this institutional candlestick and drop. So it's the same thing over and over again, right? Over and over again.
Yeah. Okay. So what is the trick there? If say you want to trade on a 1 hour and you are backtesting on a lower time frame, so what is the trick there?
The trick, trick that you need is this picture. Let's do this and then I'll finish with you. My time is up.
So that's what you should have just do one for us.
For a sell, you need this. This is where you sell. This is the picture you want to see.
Yes. Okay.
For a buy, you need this. And this is where you buy.
Yeah.
This is the pictures you need to expect once price gets to your higher time frame point of interest. Where this up here will be the entry for your higher time frame. This right here will be the entry for your higher time frame with high risk, but this will be your entry on the lower time frame with low risk. This and that.
Okay, because does it mean the one you said is risk? Does it mean, why is it risk?
It's high risk because the stop loss is bigger. If you lose, it's a bigger stop loss.
Okay.
That's the reason why I say high risk.
Okay.
But this one, if you lose, the stop loss is always small.
Okay. So the drawing here means the stop loss is, the risk is low, is what you see on a lower time frame.
Yes.
And the one the stop loss is high is what you see on a higher time frame.
Perfect.
Okay. So you draw everything, your support and your market structure, everything on the higher time frame, then go to lower time, on the, is it on the lower time frame and go to the higher time frame to look at it?
Yes. So you go, you watch, you draw your support, your point of interest and everything on a higher time frame, and then you go on a smaller time frame. And on a smaller time frame, these pictures is what you want to see.
Yes.
For a sell, you want to see this. For a buy, you want to see this.
Okay.
Did that help?
Yeah, the point of interest, is it
Institutional candlestick imbalance, that's all.
okay. All right. So then the mitigation it's like anyway, I'll check it again, but it's like I saw something like where the IC candle price could not, whether price could not get to it.
Don't worry about mitigation candles yet. Forget about that. Just pay attention to institutional candlestick imbalances for now.
All right.
Your job is to back test it and come back and show me your results.
Okay.
Once I see that you have mastered that, I'll add some more confirmation on top for you.
All right. Okay. So do we present two drawing, one in the lower time frame, one in the higher time frame?
Yes, please.
Okay. All right.
Any questions? Any more questions?
From me.
All right then. Thank you guys. We'll catch you I think on Friday. Yeah.
All right.
Thank you.
You're welcome. Okay. Bye-bye.
Bye.